Welcome back to the Port St. Lucie Mortgage Brokers YouTube channel. I'm Jaime Uribe, independent mortgage broker here in Port St. Lucie, Florida. I am joined by the lovely Mindy Hackett, real estate agent with Berkshire Hathaway here in out of the St. Lucie West office. Hi, Mindy.
Hey, how are you today?
Excellent. Thank you for asking. Today we are tackling September's monthly mortgage market, if I could get that out.
You will.
September's market monthly market report, and we couldn't do it with anyone better than with Mindy. So I appreciate you joining us to go over that. Before we get started, please tell the audience a little bit about yourself.
Well, I've been a real estate agent here in St. Lucie County since 2006. I am in my 19th year, and I've loved my job for that long. And I'm very thankful that I do something that I love so much, and I really enjoy helping people and um, using my knowledge and experience to help people get the best outcomes possible.
Well, thank you for saying all that. And um, on top of that, you're also successful in what you do. Not only do you love it, and I guess that shows in your production. I understand that you were the agent of the month for the month of September for last month. So congratulations.
Thank you very much.
I wish I had one of those little buttons that you could show have like clapping or something like that. But you are also, if you could explain this to the audience, leading edge with Berkshire Hathaway. What is that recognition?
Well, I was fortunate enough to do, I believe about 1.8 million in sales in September. And
Nice.
leading edge, so Berkshire Hathaway has a award recognition tier thing, and I've already completed leading edge for this year, which is approximately the top 9% of Berkshire Hathaway agents nationwide. And if my numbers stay on track, it appears that I will make it to President's Circle, hopefully by the
Nice.
end of the year.
Well,
We'll
I'll give you
see.
a clap. All right.
Thank you, thank you. And that would be the top, it's usually approximately the top 5% nationwide. So we'll see what happens. Hopefully I'll make it.
That's awesome. I'm sure you
But
will. And doing it, probably for any company is great. But you're doing it for a large company, right? And to be
Mhm.
recognized out of so many other agents here locally and nationally, that's great. So congratulations again.
Thank you very much. I
Um,
think we've got about, I don't know, I'd have to double check, but maybe about 70, 80 agents in our office now.
yeah.
I'd
Yep.
have to double check though.
But yeah, again, I know that wasn't easy, so congratulations. Before we get into the numbers, I wanted you to kind of tell us a little bit about the feeling out there, the market. What are you seeing, just generally speaking, kind of the environment that we're working in, and both, I'm sure, for yourself or other agents, but also just in the real estate market throughout.
Well, I have to say that I know this isn't a technical term, but this last year was weird. Um, but it was just a little unpredictable. There's a lot of agents that are having a hard time, meeting the production that they typically do. Um, and some products are selling like hotcakes while others are struggling. So I think today going into these numbers, that's one thing to keep in mind. I know we're going to look at average sale prices and year over year, they look pretty flat. However, um, I do have neighborhoods where I did see prices go down 10 or 20% because there's so much inventory in certain types of neighborhoods, particularly the neighborhoods that have very high monthly fees or taxes combined. Um, while let's say a lower priced no HOA homes in Port St. Lucie um, are selling relatively quickly and prices have gone up on those items. So,
Would you say that um, maybe one of the reasons that we're seeing that, especially for like HOAs, could it be like that of overall affordability kind of issue that we're seeing, nationwide? I think we're seeing it less here, honestly, in Port St. Lucie or this market. But you definitely hear the stories nationwide of how things how expensive things are relative to income. So,
Mhm.
do you think homes with HOAs maybe selling or staying on the market a little bit longer because of that issue?
Well, yes and no. Um, it's it's not particularly that something has an HOA, it's more the ones that have high HOA fees, um, and or condo fees. So, we saw a lot of, condo fees go up quite a bit in, what was it, 22 and 23? And that was directly related to insurance going up quite a bit. So, I've seen places where, the monthly fees went from, 300 to 600 a month. And it's mainly because the insurance on the structures have gone up quite a bit. The
Yeah.
other places where they have higher fees might be somewhere very amenity rich like Verano or Tesoro. Excuse
Yeah,
me.
not only just to put a little color on that, not only did insurance specifically in the state of Florida kind of go up, but home values, right, went up.
Mhm.
So what happens when home values go up? Insurance goes up, right? There's more to
Well,
cover
yeah,
in case of a catastrophe or something like that. So
the
that
insurance
building,
replacement value is part of that,
yep, absolutely.
because when all the costs of supplies and this and that and the real estate prices all went up, that makes the value of the buildings that are being insured go up. So,
100%. Yeah.
yeah, so those I'm sorry for interrupting you, but yeah, those
No,
types
go
of
ahead.
communities do have a little more inventory, and I think people have to get used to it as a new normal.
Which
Um,
actually I was going to be one of my questions, and I think I'll ask it at a better point, I guess, for when we're looking at listings and
mhm,
numbers and when we dig in, and I'm gonna start sharing um, the page that we're gonna go over
mhm,
here on the recording once I edit the file or the video. But if you want, you could jump in and kind of just go down the buckets here and kind of explain a little bit, and I'll jump in with some questions if any.
okay. So do you have the page up?
Yeah, I'm looking at it. I have
Okay,
two
okay,
screens. Yeah.
okay, great. Okay, so, what we're looking at, these are year-over-year numbers, so these are comparing September 24 to September 25, and, this month in particular, uh, we saw a huge jump in closed sales, up 21% year over year. Um, the number of cash sales went up 49% year over year. The median sale price is only up 0.5% year over year compared to September of 2024. Average sale price up 0.2%. The dollar volume is up 21.2%, which is um,
Overall, how much money is being transacted on?
right, the total number of volume, the volume of transactions, which is ironically the same percent as the number of closed sales almost. Um,
So
median.
before we get into the next few buckets here. So,
Mhm,
the medium sale price, average sale price, and maybe the dollar value. But I know before we started recording, we talked a little bit about, comparing it to last year's numbers, we might see some volatility, but really our numbers have kind of been flat over the last couple years, transaction wise, even medium and average sales price for the last
mhm,
couple years. But going up to the first bucket where it said paid in cash, obviously there's a big there was big movement in that category this month.
mhm.
Anything you want to share? That 49%, obviously it's 50% more transactions um, in cash than there were in September of last year. Sorry. So anything that you could share on that, because that is a pretty big move.
Um,
And
the only
I will remind you that it
thing
was an election year, so there was a lot of people
yeah,
holding
that's
back
the
for a lot
only
of
thing
different
I can
reasons.
really think of.
Yeah.
is that boomer aged people moving down here. And last year was an election year. So maybe we're seeing a lot more boomers more comfortable with the economy and things like that.
Yeah. Yeah, I agree. I can't tell you how many times I heard last year, I'm not doing anything until after the election, for whatever reason. Some reasons made sense, some of them didn't, but I definitely heard that, you know, quite a bit.
Right.
So, all right. So I know that we covered the dollar volume that went up from last year to this year, and then you were at the medium percentage of original list price received.
Mhm. Um, medium time to contract, not a big change, 4.3%. That's 46 days down to 44. Medium
Not a
time
big
to
move.
sale. Hmm?
Not a big move there.
No. Median time to sale, 90 days down to 85. New pending sales. Well, this number's flat. I guess we didn't really speak too much about that.
Yeah.
455 versus 454. So I guess when the numbers come out next month, we're going to see not a big change in year over year. Um, new listings, that looks pretty flat, up 1.4% from 631 to 640. Pending inventory, that's down a little bit, 3.7% from 669 down to 644. And active listings, an 8.1% increase from
Okay.
2235 to 2415, which brings us to the month supply of inventory is increasing, and it increased from 4.9 to 5.5 months.
No, definitely a move, 12% on that. So I'll interject that other question that I kind of referred to earlier,
Mhm.
um, that we touched on. Is this a normal market?
I'm gonna say yes.
Okay.
Even though later we're gonna look at some numbers for each month that you and I were discussing earlier, and even though the last 12 months on paper look pretty random,
Hmm.
um, I would say, with prices being about the same and as when the year started, and the month supply of inventory, every time I check these numbers this past year, they've all been somewhere between high fours and mid fives. So um, that's a flat market. That's not a buyer's market. It's not a seller's market. And when we look at these numbers that we're seeing here year over year, that's the same thing. I think it's been a flat year
So let
with
me
some harder
ask.
months than others, I
uh,
guess,
okay.
due to the
So let me
election.
ask a question that I'm sure everybody in the industry, if it is a normal market, let's say,
Mhm.
um, I feel slower than I would want to be, right? And I know that I could speak generally speaking for the lending institutions. I know a lot of agents are also, and there's a lot of agents out there, a lot of people with licenses, and some of them practice, some of them part time, some of them don't practice at all. So I get that, but
Way too many.
um, yeah, but it is, at least I think there's almost a disconnect, and I don't know what the answer is. So I'll ask you what your thoughts are. But there's almost a disconnect with the numbers say we're in a normal environment, but doesn't feel like a normal environment. Is it just me? What do you think about that?
I actually think you're right. I know that I've been very blessed this year to have done the volume that I've done because some of our agents here in our office who are amazing, talented, great, ethical, good agents, nice people, aren't doing as much business as they're used to doing. Um, and I think that because of the boom that we had, there's a lot of new agents um, that are still, trying. But, the fact is, I think it's 10% of the agents do 90% of the business.
Yeah.
And right
I think
now
it's
there's a
probably
lot.
always been like that, right? I mean, it's,
Yeah, for sure.
you
But
know,
I would say right now there really were a lot of, there's always, when the market's good, there's always a huge number of these people that have this fantasy that they're gonna become a real estate agent and make,
because it's easy.
200, yeah, and make $200,000 a year the first year, and then they can barely do one transaction or maybe two if they're lucky, and
Yeah.
they give up, because they realize how hard this job is, and um it takes a lot to really make it in this business. So, but yeah, I think it is odd that it feels that way. But when we do see, what you mentioned was the number of cash sales being up so much year over year, um, that would kind of account for you. Um, and I'm
Yeah,
doing what
that's
I,
basically 50 out of 100 and or whatever, I'm sorry, out of 400 or 508, it's 139 people that didn't need financing at all.
yeah.
That's a big
So
chunk.
yeah, but I think we are kind of starting to see it's the time of year that boomers start coming down. You know, So
Yeah.
what I'm thinking is maybe, okay, they want to spend a season here in Florida, so maybe they're getting that squared away. I don't know. But yeah, I mean it's
Okay.
definitely been a strange year, and when we look at the numbers, you'll see that. Um
Yeah, I
when we
think we're
look
gonna end up falling. I'm sorry to interrupt, but I think we'll end up falling to just a different feeling normal. Yeah, I think, anything prior to 2020 was normal, give or take,
hmm
a few years here or there, some odd years. Um, 2021, beginning of 22, I think kind of skewed everything, skewed how we felt, right? Skewed how much money we thought we could, we deserved making. Skewed a lot of things. I mean, just a feeling or, a lot of things across the board,
hmm
where it's almost like you're driving, 100 miles per hour and you slow down to 75. You're still going fast, right? But
Right.
it feels like you're at 30 miles per hour because you've slowed down so much. That slowdown kind of, and I think that's
True.
kind of what the feeling may be, because they're just, I could tell you, I mean, at least for me personally, the people that I speak with, there's kind of a disconnect between numbers and feelings.
hmm
But it could be that we're kind of comparing it. Maybe our brains are comparing it to some different times, especially that pandemic time.
I think so.
So
I think so. For sure. Well, I definitely had more free time prior to that, but um, you know, it is what it is. But I
yeah,
think you're right. I think that did kind of change how we felt very rapidly. So
yeah,
um and yeah, I think
it's
we are
gonna,
returning to what's normal because a normal balance market is 5 to 6 months supply.
and we're
So
there,
yep. And we've
and we're
been there
there.
all year.
Yeah.
Yeah.
And again, before we jumped on, actually, we're gonna look at these numbers and we'll see. And I won't steal your thunder, but although it might have felt like a roller coaster, to your point, it's stable.
Yeah.
The numbers show it's stable, right? And I'll
Right.
I'll I'll stop there because I'll let you kind of jump in here and go over the last two sections here, which is the month over month and then the closed sales.
Oh, so I'm seeing the closed sales. So this is the second chart here on this first page. It's a funny year because if we look back in the past 12 months, right? Sales were down immensely September, October, November, right?
Election
And
year.
that was the election. And election years typically are very slow for
Yeah.
real estate. And I don't know how long you have to be alive to realize that the election doesn't make a bomb go off the next day, and change the whole world instantly. We
Yeah.
have checks and balance in place to keep things safe and stable here, and it's just funny. But anyway, yeah, we did see a huge drop in sales at that time, and I remember as a real estate agent here sitting in the office that time it was a little bit scary just because People were definitely stepping back and waiting. But then we saw in December, year over year, we went up 5%, and January 5%. And I would imagine part of that was pent up demand from the uh, months leading up to the election. February down 12%. I don't have a reason for that other than um, maybe it was a slower snowbird year. Um, March down 1.5 and April down 9.6. Surprisingly, April closings are typically pretty busy because it's people that went under contract in March. So in
Hmm.
April, we see a lot of, I think, snowbirds that came down for the season and we're going to look for a house, making their final decisions in March or early April and getting to contract. But those, I'm assuming that's where the lack of numbers was there, coming down 9.6%. Um,
I will add, one of the reason this doesn't break it down. You'd have to go look at
excuse
those
me.
numbers, but I have a feeling, last January, those, that November, December, January, going into 24, right? Not an election year or anything like that, but they went down.
Mhm.
Where normally that's our high season. Like that's where people are coming down and buying property. We have to remember that that's also when a lot of the condos were readjusting their budgets and
Mhm,
their
mhm,
insurances. And I remember having these conversations. I think I went like maybe 5-6 months without closing the condo, because the demand had gone down, number one, but
mhm.
even if they were interested, you couldn't even get them approved. Like there was just madness in the condo market, right? It's since then, I feel like it's stabilized, but looking at that, especially January, normally we have a pretty good January, um but I think
Well, I
condos skewed that.
I think that we're getting used to a new normal in the condo market as well, where we did
Yep.
see um, insurance replacement values go up quite a bit. Therefore, um, the insurance went up quite a bit, which made condo fees go up quite a bit. Um, and I think we also had, and I don't remember exactly what month it was. It was either the end, somewhere in, I think it was 24, where we had a bunch of new forms for condos as well, regarding those milestone inspections and things like that.
No, yeah. Yep.
So that was all new. And meanwhile, so what you've got is um, actually in September, this past September, I closed on something on the island for the first time in a while, and you know, showing condos on the island. Um, and obviously, right now, this is the time of year where a lot of people aren't here yet,
Hmm.
or back in September or August. So there was a lot of work going on in a lot of the buildings that I was showing, like major renovations going on um, to the exteriors and, things
Yeah.
like that.
Work getting done.
So,
Yeah, there was a lot of different reasons why. Like there wasn't one reason. I don't think that condos were kind of there were every condo had their own, either they were having issues with inspection, or they were getting repairs at that point, or they had to rebudget and increase prices, and obviously that throws up, you know scares buyers away, so I think they, you know but I since then I felt like it's stabilized. It's going to
yes,
stabilize
I think
at a
it's
different
starting
level,
to.
right?
Well,
That
it's a
it
new,
used
there's
to be,
going to
but
be a new normal there.
yeah.
I'm sorry, but I think there's going to be a new normal there. Um, because again, and I didn't run the numbers on this, but if I had to guess, um, I would guess that condos on the island may have gone down in value 10-20% in the last 12 months. This is a complete guess. I'd have to run the numbers. But because of all these changes, and now instead of people saying, "Oh, I'm going to go buy a condo in Florida," expecting the condo fees to be, I don't know, in the past they were, let's say 5 to 800 a month, and now they're more in the 8 to 1100 a month range. Some even more. Um, so um, that's a new normal that people have to get used to, you know?
I agree. I agree.
So
Um, Before we end, I wanted to ask you, what is your advice to buyers? Let that, what you're seeing in the market. What are you seeing that you could advise them on to make decisions to help out buyers out there? What and or sellers? Obviously, you do a lot of listings as well.
well, I would say that the best thing you can do for yourself is, find yourself an agent with a
I'm
lot of
sorry.
experience.
Listen. How about listen to the agent?
Yeah, that's a good way to place to start. Well, but, all of us have a different experience level, um, and, but I think having someone right now who can really look at the numbers for what you're looking to purchase and dissect it, um, what's really going on, especially for sellers. You know, I hate to admit defeat, but there've been a couple neighborhoods where I have listings right now where my listings are struggling, other agents' listings are struggling. I've got comps to support where we are on price, but we're not getting showings. Um, and that doesn't really feel great, but it's hard. I mean, if other people aren't slashing their prices, then, you know, I'm not calling my sellers asking them to slash their prices just to get it sold unless that's where they're at emotionally or. Um, but I have things that are priced appropriately and they're not getting showings. But these are in higher fee neighborhoods, which are struggling a little bit. But I think that this year we're going to maybe see some of that inventory start to go. One thing that I also noticed over the summer, looking at these higher fee neighborhoods, and with my sellers, I run, I look at my listings every 2-3 weeks, and I look at inventory and what are we competing against, and whenever there's something notable, of course, I always call. Um, but one thing I saw, for example, in Verano, we had a year's supply of inventory for about a year in Verano, and then over the summer, I saw the numbers drop quite a bit down to a 9-month supply. But I believe the cause of that was, I pulled up sales, or I'm sorry, I pulled up, canceled, withdrawn, and, listings, and there were 108 in the last 12
Wow.
months. So, that's quite a bit. Um, so I think that there were a lot of people that said, "All right, let's take this off the market for the summer. We'll reset the number of days on market counter, and then put it back on, and we'll see." I should have pulled the inventory before we spoke to see how much they have right now, but I'm very curious to see what happens with that inventory in the next few months. Are these people going to put them back on the market? Are they going to rent them out? What are they going to do?
And it might have already
Are they going
started because it went up a little bit already for September. So
to? Yeah,
maybe we're already
yeah.
seeing that trend start. I guess the story will be told over the next few months. So
Yes, but my point is that every product is really specific, and having a lot of knowledge is great, but you also really need to look at what's going on with whatever you're buying as well. How much inventory is in the neighborhood? If there's 8 of the same model that you want to buy on the market, right? Then you might have a little more flexibility on price than if there were 2. So, um and guess what? If this one doesn't work out, unless there was something really spectacular about it, then, we can move on to one of the other 7. But it just, everything's really specific. And I think you need to have someone who's very experienced, to take a look at those things and guide you through the process, um, with that information as well.
what some of our audience is also in our industry, um, realtors, real estate agents. Any advice for how they can maybe not be just like Mindy, but not a lot of people could get to that. But what advice would you give them to help them maybe elevate their business, get more listings, and, be more productive out there?
Well, I think that doing things the right way is very important. That's how you get repeat business, and that's how you get referrals, is by, treating everyone like their family, and truly caring about everyone's transaction. Um, and your clients, you get very close with people, because you're walking someone through one of the most stressful things they're going to do in their life. Um, so, I think it's really important to make sure that me personally, um, I don't, as an agent, it's not about me. It's not about my paycheck. It's about what's the right thing for you, and for you, my client, And I think that it might take longer to get off on your feet by doing things the right way and always telling people the truth. But once you do, I think you're more successful in the long run by doing things that way.
Words to
Because
live by. Those
yeah,
are
you're
words to
just,
live by.
and I know that you live by that, and that's why, we've always gotten along so well, and that's why I'm comfortable giving my clients to you.
Thank you. Vice versa.
You're
So
welcome.
yeah, and you touched on working with someone with experience. I get the privilege to work with a lot of real estate agents here locally.
Uh-huh.
And I could tell you 99.9% of the ones that I get to work with are amazing people, right? And they're all at different levels of experience, and that's okay. We all had to start somewhere. So
Right.
that's not an issue. But not every real estate agent is the same, just like not every loan officer is the same, right?
Right.
So when to the buyers out there, to the sellers or potential sellers, interview your real estate agent. Maybe look at their Google reviews, or maybe ask who, if your neighbor had a good experience, who they used.
Right.
And I see it so many times. They walk into an open house or just anything, and they start using someone and they don't know anything about them. you know
Yeah.
and that's okay. Sometimes it does work out, and most of the time I'm sure it does. But when it's such a big investment that you're dealing with, when it's the majority of your assets are in your home, and that transaction, um, you want to make sure that whoever's helping you, um, guiding you through that process, not only do you trust, but that they know how to do it at a high level. Very important.
Absolutely. Absolutely.
So
Or if someone's a newer agent, then they have a mentor who's helping them navigate and staying on top of things with them.
yeah,
Um, because look, I was a new agent once, and I worked really hard. I tried really hard, and um, I made it, which statistically is very unlikely, because I think, what is it, 86% or 89% of real estate agents quit after 2 years. Um,
I know it's
and I'm
high.
Yeah, it's one of those numbers, I can't remember. But you want to find someone who this is their life, not someone who this is what they do on the weekend, or oh, because you know what I mean? So,
You can't work with it's hard to work with a part-time agent and anything. Part-time mortgage broker, part-time
yeah.
agent, just doesn't work out well. Before we go, any parting words, anything else that you want to touch on before I let you go?
Um, well, I am looking forward to seeing what happens next month, because it looks like it's going to be pretty flat year over year based on the number of pending sales right now. So that should be interesting to look at. And I actually, before we get off here, want to ask you a question that I think are is on a lot of people's mind, which is, interest rates seem to be coming down. What what are your guesses on that? Because obviously when everyone was saying, marry the house, date the rate, which made both you and I sick in our stomach.
How many times did we talk about that? I hate hearing that.
Yeah. But it seems like it's really happening now, like it's real now. I mean, because rates were, what was it, by the end of 2025, rates were supposed to be back in the high fours, low fives.
Yeah. So
That's what they were projecting.
they have been projecting that they were going to be in the high fives, low sixes, high fives through next year.
Yeah.
I think we're at the low end of that now going into next year. So it's a tough conversation because most people relate low interest rates with a booming economy.
Mm,
Hey, rates are low, things are good. And
yeah.
it's, you've been doing it a while. I've been doing this a while. Low rates usually come with tough times. Right now, it's not like we're in a tough time, but really what's driving the rates lower is a couple things. And look, we're not, definitely myself, I'm not an expert in this, so I'm just talking about generally speaking and overviews and things like that. But
Mhm.
between the Fed lowering the rates due to fear of increasing unemployment, which is not good, and the bond market, specifically the 10-year yield, coming down because inflation is coming down, which, yeah, inflation's bad, but we need inflation.
Mhm.
The government needs steady inflation. Their target goal is 2%. So as that slows, we're at 3, I think, or something like that right now as we speak. As that slows, rates, again, they're talking about the 10-year yield, so there's things that could change that. But as that comes down, as the economy slows, as unemployment increases, we will see the rates come down. And they do that to ease the market, to make it easier for people to, I'll be honest with you, I don't think the rates are and I say this, kind of in conversation with yourself and with other agents, but I don't think we're at a bad level with interest rates. Rates are not a problem.
No. You know what?
We're at
But the
6%,
the
whatever that,
challenge,
range, wherever it's at. It's we're in that 6% range, generally speaking, and that's where we've wanted to be for the last 30 years that I've been around doing this.
yeah. Well, I think what's changed is um because of property taxes and insurance going up so much locally here in Florida, especially in our county. Um uh, um the affordability has gone down quite a bit due to that, making areas like this more particularly interested in where rates are at. Because look, if our um I mean, think about it. People prop around here, let's say you're buying a $400,000 house, right? So your taxes are going to be what, 75, you homestead it, let's say your taxes are going to be what, 7,500
Or
to
zero
8,000.
if they pass that, which we won't get into that. But no.
Oh, I'd love to have a conversation about that another time. But let's
We
say you've got
will.
8,000 in taxes, right? And another 3, 4,000 in insurance. That's $1,000 a year going to your escrow, or I'm sorry,
A
$1,000 a
month.
month going to escrows, right? So what's the payment on that? Around, I don't know, $2,000 a month is now $3,000 a month.
Yeah,
So
you took the words out of my mouth. That's exactly where I was heading to, which was saying the rates are not the problem, but they're still a problem. The
right.
problem is the affordability issue. And look, it could be, you know, maybe the rates are still a little too high. I mean, obviously they're not 10%. They're they're not, they're at a lower level historically. So I don't think it's that. But then you add taxes that you mentioned, insurance that you mentioned. Earlier, we talked about how HOAs increased, right?
Right. Well, and the
Condos,
affordability, housing prices is part of that as well.
but
You know,
then you add, forget about the housing expenses, which are, compared to a few years ago, a lot higher, right? For
right.
putting that aside, groceries, car payments, tuition, whatever, like everything overall has gotten higher. So it's just an overall affordability issue, which affects someone being able to save money to put down money on the purchase of their house, to qualify for a regular single family home that they would have wanted to buy. Why? Because maybe they have a car payment and it's now $700 a month. I mean, before you could buy a very fancy car, you could afford a very fancy car with a $700 car payment. And now I'm seeing them on, nothing wrong with them, Hondas and Toyotas and, all that stuff. It's crazy.
Yeah, fancy car payment is now what, $1,000
Over
a month?
$1,000.
Yeah.
And I've seen $1,000 car payments that are not fancy cars.
Well,
Unfortunately, that's a whole different market. That's in, that's
my
kind of an issue.
opinion on cars is certified pre-owned luxury vehicle.
Mine is drive it till the wheels falls off. And if you see my car, I will drive it proudly till the wheels falls off.
Well, that's because you use your calculator a lot more than most people do.
It's because I have a big calculator.
That's funny. I like it. You should send me one of those.
I don't even know where I would find them. I'll be honest with you. I've had this thing for like 15 years, and before that, I had the exact same ones. It's anyway. I think on that note, we'll end the show here. But Mindy, I appreciate you joining me. I know that you have some calls that you're expecting, and so am I. So again, I want to thank you. I want to congratulate you on your recognition with Berkshire Hathaway with such a great year that you're having. And I know that you will finish strong. And I appreciate you, all the great words to other agents and to the clients out there, or future clients, hopefully. So other than that, I appreciate you. Thank you so much. And we'll do this again.
Absolutely. I appreciate you too. Maybe one day we can actually keep it to 20, 30 minutes.
Not impossible. It's impossible. But thank you, Mindy. Have a great day.
All right. You too. Take care.
All right. Bye-bye.